Hey everyone, it's Nick with Us versus Herd. Thank you so much for watching this video. If this is your first time here, please hit that subscribe button. If you're already a subscriber, thanks for joining us. First off, I want to say if you're not part of our options trading group, it's free. Link is below. Ton of great people in there. Appreciate all the contributors. If that's you, thank you so much. If it's not you, just hit the link below in the description. You could join that group. What I want to talk about today is liquid options versus illiquid options. How do you tell what is liquid? How do you tell what's illiquid? A lot of times, a lot of beginner traders, they'll send me a message like, hey, what do you think of this option or this stock or this position? And I'll take a look at it, and the options are not very liquid, and I'll go through what that means here and kind of how you can spot that. This video is more for the beginner. For the seasoned or the advanced trader, you definitely know what a liquid or illiquid option is, but a lot of people don't know what the difference is and why you should trade. Why would I trade a liquid stock option versus an illiquid option? It's the same thing for stocks. I'll go through it here kind of just to show you what it's like. And I'm going to go to the options chain here. And actually, I'm going to start off at, let's just say, something popular like Apple. As you can see here, Apple, this is the option chain here. I'm using Thinkorswim on this one right now. And there is weekly expirations, and there is monthly expirations. And before we get into that, that's one of the, before we get into some of the details of the option chain here, the first indicator that I look at is like, okay, does it have weekly options? If it has weekly options, there's a good chance that it's going to be, well, not a good chance, but a better chance that it's going to be more liquid than if it only had monthly options. Now, if I look at something like Domino's, big company, popular stocks doing well, but look at the option chain here, only monthly, September, October, December, and then it goes into January, March and January of 2020. So not that many to choose from. If you look at Apple, let's go back to Apple, and we got the weeklies here, and then if you go back to Domino's, it doesn't have that. So that's kind of the first indicator. It's like, hey, does it have monthly options or weekly options? If it does, that's kind of a sign it's going to be more liquid, versus Domino's doesn't really have great liquidity here. And looking at Apple here, we'll kind of dive down into some of the options traded today. And one thing you look at here is the volume and also the open interest. So I definitely have these columns are fixed for my profile here. But the volume will definitely tell you a lot, and you can tell, like, which strikes are traded more, which strikes are traded more often. You can see, hey, this one's got 37,000, this has got 2,900, and this is a very liquid options chain here. This is a very liquid stock for options. And also how you can tell is the bid and the ask, as you can see, is pretty tight. I mean, the market is closed right now, so it's going to be a little bit more wider. But these, like, a lot of times Apple trade like penny wide markets, 2 penny wide. Like if you look here, 69 cents, 71 cents. Over here, $1.15, $1.18. And what you want are very tight markets between the bid and the ask. And the reason for that is because you're not, let's say you bought an option and let's say you made a mistake and you want to sell that option right back. You're automatically bought it for more, you're going to have to sell it for less. Versus, something like this, let's say you bought this call right here, this 220 call for 71 cents, say, hey, I don't want it anymore. You could lose $2 and sell it for 69 versus an illiquid stock. Let's go back to Domino's here. Domino's, you can see here, the volume today, a lot of these didn't even reach 100 for the puts. Calls, I mean, these calls are not looking so bad. But as you can see here, the bid and the ask, I mean, this is 2,200, 689, 1,200. That's actually pretty good. I prefer to trade options that have at least 500 volume, mainly because of the liquidity and to get in and out of trades, and also if you get in trouble. But if you look here, to kind of go back to the bid and ask, this is almost $1 wide. This is 80 cents wide here, 60 cents wide actually, 560, 620, 220, 270. So 50-cent wide markets. Obviously, these are going for a little bit more money, but you kind of get the idea here that you could easily lose money. Even if you have it at mid price, you're going to probably be losing on these. Versus if you had mid price on Apple, you're not going to lose that. You're not going to lose that much. We'll go back to here. Yeah. And also on Apple, you can see that the options on the monthlies are also heavily traded. One of the most liquid is SPY. And you can see here, not only does it have weekly options, it has multiple weekly options. So this trades, it expires Monday, Wednesday, and Friday. So they're trying to, they figured out a way to say, hey, people want these SPY contracts. Let's give them more expiration dates so we can make more commissions, make more money off of this product. And this seems to be doing well. Like, if you take a look at these options, let's say for today, all these were traded above 1,000. Some of these put 33,000, 35,000, and just a lot of contracts. Even on something that August 29th expires 2 days from now. Super liquid here, open interest, and the volume is very, very high. So, even stocks that you like let's say Spotify. People are like, hey, Spotify just did an IPO where I'm really interested in buying options on it. I think that's good. Just because it has options doesn't mean you should trade it. Sometimes stock's a better deal. Buy some stock if you want, or if you're going to trade options on these, know how to trade them. If you look at Spotify, it has weekly options here, but if you kind of go into it here, only a couple hundred contracts sold here. We got 20-cent wide markets here. Not terrible. If you're looking to hold these for the longer term, you could probably make some money on these Spotify options here. But if you're looking to day trade these, you may have a difficult time on the weeklies here. You oftentimes on these you get better pricing on the monthlies for stocks like this, mainly because of liquidity reasons. If you look at these monthly puts here, there's only 16 volume on the 190. I get it. It's probably not likely it's going to drop to, stock's only 194. They're saying 39% chance that it's going to be in the money. 16 contracts here. Looks like, and you can kind of see what's skewed here, what people want to buy. Looks like they want to, on the put side, they want to buy the 195 puts. Here, we're heavily traded here today. Lost 25%. So, that's kind of a quick way to kind of tell right away what's liquid, what's not liquid, and has a terrible liquidity. Let's say, for instance, like this therapeutics company. I get messages that people trade stocks like this all the time. And if you look at it, look at this volume, 10. Look at this, bid is 0. That should be like a red flag. The 25 days out, the bid is 0 on this. So nobody wants this. You got some sellers here. The bid is 0. The ask is 70. The last price you paid was 20 cents here. It was last traded. Only 10 contracts and 74 open interest. This is just ridiculous that anyone would put your money here. Like if you trade this right now, you're guaranteed to lose money in this. Like you're not gonna make it's not trading. If it's not trading, you're gonna have a very hard time making money unless there's some huge move or something crazy or something. But on a day-to-day, on a trader aspect, you're not gonna make a whole lot of money here. Alta, some of these other stocks, one of the I used to trade Priceline a lot, which is now BKNG, Booking Holdings. Great stock. Love it. It has huge moves, but the liquidity, on these weeklies here, you're not even getting above 200 on most of these. I do like to trade it from time to time. Last year I traded it a lot more just because we had such a bullish market. But what you'll find out, especially when you're selling spreads, so like call or put spreads, you're not going to get great pricing because the bid and the ask it's so wide, and you're not going to get if the stock moves around a lot, like if there's a big swing, you're not going to get the best pricing, and you're not going to be able to get in and out of trades. Like I've had issues like on trading, Booking, and Priceline, where I wasn't able to get out of a trade when I wanted to get out of trade, and for the price that I wanted to pay for it, I always had to do above market. So just be aware that you're going to be giving some dollars back on stocks like this. Like it's okay to trade them from time to time, and you can see there's some big gains in here, and I do sometimes. But from like a beginner standpoint, you're better off trading something more liquid like Apple, SPY, Tesla, Netflix. What's some of these other ones on my list here? Twitter, Shopify. So, just be aware of what you're doing. And then also you can Thinkorswim and Tastyworks, you can kind of also set up kind of a secondary. Thinkorswim, you can set up a scanner where you can scan for, okay, what's the volume, and you can say, okay, I only want to see options that are at least 500. We can just type it in here. At least 500 volume today, and you can set up a scanner. I don't really use this, but you can set it up to see what's traded here, what were the highest volumes. This is kind of also interesting. Like if you want to see, hey, what was the most traded option today, you can kind of see this. I mean, this is 111,000 contracts, and you can kind of trade that way, get some information, maybe find some trades this way too. You can definitely see that. I mean, as you can see here, Apple's one of the top ones here and stuff like that. I don't know why they don't include, I guess because I only wanted stocks, not ETFs, but you can see that SPY is not in here, even though they had like 39,000 contracts. I think the ETFs are not in here, just the stocks. And then also on Tastyworks, they make it kind of easy for you to see. If you go into their watch list, notable stocks, you'll see the liquidity here, and you can actually separate it by what's the most liquid to least liquid here. So you can see all these stocks that have 4 stars are very liquid, 1 star not so liquid, 2 stars not so liquid, 3 stars okay. You get the idea here. So there's definitely a lot of ways to find out what's liquid, what's not illiquid. And the gist is you're going to be leaving money on the table. It's going to be hard to get into trades. It's going to be hard to get out of trades. You're going to have to be, if you put a trade on like this, you're going to have to cancel and replace, and you're going to be leaving some money on the table. From time to time, it's okay. If you find something that you really like, definitely you could do it, but just know the risks and know what you're trading and the differences between liquid and illiquid options and kind of how to spot them. That's some of the indicators. I just want to make this a short, simple video. If this video was of value to you, please hit that like button. If you're not a subscriber, hit that subscribe button and join our free options trading group.